and the Asian markets are also quite mixed right now.
Aditya Birla Capital has approved the amalgamation of its wholly owned subsidiary, Aditya Birla Finance, with itself.
For the Nifty on the downside, in terms of supports, it should not break the recent low of 22,224.
BAT is looking to sell 4% stake in ITC, and I understand that the block will get launched early this week.
As flat as it can be, 4 odd points in the Nifty, sensex about 17, 18 points.
The entire outperformance, right, can be termed as speculative in any manner.
There is a buoyancy in the market as a result of the elections as well.
It's a very volatile day for the market so far. It's been a topsy-turvy first couple of hours.
Aditya Birla Sun Life AMC, the recently listed or a more newer listing from the Aditya Birla Group that is looking at the promoter selling down stake.
The BJP government has been able to implement it through a formal notification.
The Nifty, that one is up 67 points. There's some recovery from the lows.
Well, some recovery from the lows, but some selling from the highs as well now. In the last 20 minutes or so, there's only about 10 points on the Nifty left. And this was different 15 minutes back. So a bit of come off is what we are seeing. This is Closing Bell. We'll track markets for you over the next 1 hour. We're coming to you from the CNBC-TV18 Mottilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here. And of course, Nigel is joining us from the newsroom floor. Guys, hi. Afternoon.
Hi, afternoon. The selling in mid-caps, small-caps continues.
Oh, absolutely. That's
Same story like yesterday. I mean, looking at the small-cap index is down almost 2%. The micro-cap index is down almost 2.5%. So I think this broader market issue, not quite out of the woods.
I told you, the green was not an indication of where the market's headed in the morning, what we were discussing. But, you know, that is the story, right? But just to a couple of points before we really get into it and tell you what's going on. So we've got, and sort of I wrote this down 10 minutes back, it broadly still holds, weak broader market, very weak broader market, but you know, they're not up or anything in any major fashion, but they're not down like what the broader market is doing. On the Nifty, today becomes a bit important. 46,884 is that number. Bank Nifty is also flat right now. But the low is 46,884 would be good, nice if that holds. 5:1 declines outnumber advances, so it's pretty sort of poor market there. Small cap index is down 1.5, and now, I mean, we are talking double-digit cuts from the highs. 10% on the Nifty's small cap index from the highs that we saw back in February. And of course, PSU is something we highlighted right in the morning that the index is showing signs of some negative divergence. And I think if you look at it, the PSU space is seeing a little bit of profit booking. The PSU bank index especially is the one which is taking it a little hard. 2.5% lower on that index as well. Rima.
Hi, it's the broader markets and the sell-off there, which you know, is very concerning. The mid-cap index is down 1.5%. But the good thing is perhaps in a way that from 12 o'clock, it's still holding on to that 1.5% loss. The sell-off took place in the first, 2.5 hours, 3 hours of trade. And after that, it's been holding on, nursing those losses of 1.5%. The small cap index is down nearly 2%. The Nifty micro cap 250 index is a cut of close to about 2.5%. The other indices which are weak, Prashant spoke about PSUs, PSU banks. Realty is taking quite the brunt today. The real estate index is down nearly 4% now. And the metal index is up is down 1.5%. IT, though, is trying to fight for the bulls today.
Yeah, absolutely. IT, I think, has been the only slightly more steady part of the market where we've seen at least some consistent green. The Nifty Bank has had a 930-point swing nearabouts today from the lows to the highs, and then it's really all over the place. Been very difficult perhaps for traders to trade that index today. Let's see what it does in the last 1 hour. On the broader market sell-off, just want to highlight a couple of stocks that illustrate how this is happening. It's across the board really. You've got something like a Patanjali Foods that's losing about 6%. Keynes Technologies, a lot of the EMS stocks that have been so well loved and well received by the market. There is a lot of profit taking going on today, about 8% down on Keynes. Godfrey Phillips is down about 9-10%. You have stocks pretty much cutting across all sectoral lines. By the way, GTL Industries is down about 10%. So the cut that started yesterday has only gotten a little more deeper. Today's listings, RK Swamy, very, very tepid start. I guess market sentiment has a lot to do with it as well. RK Swamy is down about 7% as we start things off. So, Nigel, hard to say, where this ends. But as of now, I think a lot of that sort of froth, so to speak, that the SEBI chairman also spoke of, that seems to be coming off.
Well, that's right. And the batsman that's standing in there today, as all the wickets are falling around, is HDFC Bank. If it wasn't for HDFC Bank, I'll tell you what, we would have been down by another 30-40 points approximately, because that's virtually at the high point of the day, with a gain of close to around 2.5%. There was a global index rejig, that had some pending flows. And Nuvama had said that it's likely to take place by the end of the second week of March, which should be by the end of this week. So I guess that is one part of the reason why we're seeing some bit of support coming for HDFC Bank. Actually, you just pull up a contribution chart. You'll see the reason that I'm talking about HDFC Bank, and Reliance Industries is also up more than 0.5%. So both those two big boys are talking about 20 to 23% of the index that are holding well in the green. And that's what's helping the bulls, at least for now. But big pain in the broader markets. How do you position yourself, though, in the final hour of trade? We have, I think, Mitesh, who's back with us. Hi, Mitesh. Well, it's been that sort of a day, right? On the index, not too gruesome. And it's giving you the sense if you buy the dip, it's okay. It's in that bit of a range. It's not falling apart. How would you trade the index at around this 22,300 odd mark?
Good afternoon. So I think, what has happened is that we had some kind of negative crossovers on a lot of indicators on the intraday charts yesterday. And then in the first hour, which is still about 10:15, we had a very strong rally. But that's been sold into. I think slowly the picture is weakening. And my sense is that this time, we might actually, if we go down towards 22,250, we might actually break that. And if that happens, I think good chance that we are looking at a test of 21,950 and then eventually even 21,800. So my sense of, looking at the indicators and the overall setup on the chart is slightly on the negative side. So therefore, I think, I would suggest people to refrain from taking long positions and look for shorting opportunities slowly, as whenever you can identify them. I think, take those kind of positions over there. That's the way, we'll approach the markets.
Okay, thank you very much for that. Let's move on now and talk about the pressure that we're seeing in the small caps. The small cap index has now seen a fall of close to about 10% from the intraday record, which was hit on the 8th of February. Now, what are the contributing factors for this fall? Which stocks have been the big losers and which ones have managed to buck the trend and rake in some gains? Hormus joins in with the details. Hormus.
What a month can do, right? If from the small cap index that was making new highs one day after another is now seeing some extreme selling pressure, and the index is now down 10% from that record of 16,691 that it had made on the 8th of February. And since then, the index in absolute terms, the index is down over 1,500 points. Now, since then, only 14 stocks, if we take a look at the 100 constituents of the small cap index, only 14 of them are trading with gains since then, but some of them are trading with gains of even less than 1%, and 80 stocks are trading with losses. More than 80 stocks are trading with losses, and out of those 80, more than 80 to 85 stocks, over 35 of them are trading with losses in excess of 10%. The losses range from anywhere between 10% to as high as 30% for stocks like IIFL Finance. Now take a look at some of the biggest losers since that day, from when the index topped out. Look at SJVN, NBCC, Angel One, Suzlon, Phenol-X Cables. All of them saw some stellar moves throughout 2023, and those stocks from the 8th of February are down in excess of 20%, almost 25% for the four names. Phenol-X Cables is down 22%. But despite this correction, there are still stocks like SJVN and NBCC, they are still trading well above their historical averages. SJVN is now trading at 25.7 times FY25 earnings, which is still higher than its 5-year average of 21 times. Same is the case for NBCC, that is trading at 40 times compared to its 5-year average of 30 times. So it's still, it shows the kind of moves that we have seen in these stocks. And this was from when the index peaked. Now, if you take a look at these stocks on a standalone basis, they have seen a far bigger correction from them on a standalone basis itself, because SJVN made a peak of 170 rupees. That stock is down 33% from that peak. Same is the case with NBCC. That's down 33% as well. Angel One made a high of almost 4,000. Now it's back to 2,500. That is down 34% from the peak. And Suzlon, which made a high of 50 rupees recently, is down 24% from those peaks. And there is a specific sector that I want to highlight, is those high-flying railway PSUs that have seen a sharper correction as well. Stocks like IRFC, RVNL, IRCON and RailTel. Most of them had moves of 200 to 300% in 2023, and those stocks now are correcting anywhere between 25 to 30% from their peak. Multiple factors. There's some circular from the Amphi circular, the SEBI chairman also highlighting, saying that there is some froth in some segments in the small cap space. So the mid caps fairly okay, but the small caps are bearing the brunt of this correction. Back to you.
Oh yeah, and the micro caps even more. Got that, Hormaz. Thank you very much for putting out that interesting data for us. Well, let's get the conversation going. We have Sudeep Bandopadhyay, Group Chairman of IndiTrade Capital, with us on the show this afternoon. Sudeep, thank you for joining in. I think the question that a lot of people will wonder, that while this so-called froth sort of, works its way out of the market, what should one be doing? Which are the stocks that are now providing perhaps a decent entry opportunity, and which are the ones that one should completely steer clear of? So let's take the question of PSUs, because they're falling and losing some ground. What would your approach be?
Well, Surbi, I think, some of these PSUs, really the valuation was, one was not able to justify the valuations. I think I'll talk about two sectors. One is defense, the other is railways. I think fantastic sectors. The government of India has put a lot of might behind both the sectors, and absolutely for right reasons. We have never ever seen the kind of work which is going on currently in the entire railway infrastructure side. We have never seen this kind of momentum in defense. Defense Make in India has made a big difference. But what had happened is that the prices of these companies in these sectors have gone up, with in complete disregard to the fundamentals. Based on some order wins and some projects getting sanctioned, I think the prices were taken up a bit irrationally. And at some point of time or the other, the correction was due. Correction is happening. And I think post-correction, some of these are excellent long-term bets for an investor. So I will talk about defense companies like the shipyard companies, whether it's a Mazagon Dock or it's a Cochin shipyard. After some correction, they will definitely be a fantastic buy for a long-term investor. So is defense electronics like Bharat Electronics. I think it's a fantastic company. Bit of correction, I think it should be in everybody's portfolio. As far as railways are concerned, I think the story is pretty much the same. If somebody picks up good, rail-related companies at a decent valuation, there is absolutely no way they can go wrong with the kind of work which is happening in Indian railways currently. So whether it's the wagon manufacturing companies or the financing companies in the railway side, I think after some more correction, they will be decent bets for long term.
Okay, thank you very much for that. Now let's talk about ITC. That's one of the top Nifty losers following reports about a potential stake sale by British American Tobacco PLC, BAT. Sources have told CNBC-TV18 that the block deal could be launched as early as today evening. We actually have Mangalam tracking the entire pack of cigarette stocks for us and their performance. Mangalam.
Well, this supply overhang on ITC has actually caused the stock to underperform over the last 6 months or so. In fact, currently as well, the stock is over 20% away from its earlier record high hit, a little over 500 rupees on the stock itself. But what it has also done is it's allowed all the other cigarette players to perhaps catch up in terms of stock price movements as well. So if you just take a look at this year itself, ITC is down about 13%, VST Industries is up around 11%, but the rank outperformer has been Godfrey Phillips, up 66% at a fresh record high for that stock as well. What is it that has gotten VST Industries and Godfrey Phillips to outperform as against ITC? For VST Industries, the support came in from its largest shareholder, Radhakishan Damani, who bought additional 1.5% equity from a large trade from a lot of the domestic mutual funds in February, on February 1 itself. And for Godfrey Phillips, it has been a steady rise in market share. If you just take a look at the volumes of all the cigarette companies over the last 6 quarters or so, you would see Godfrey Phillips actually consistently outperforming the industry over the last 6 quarters. Case in point, Q3 FY23, where ITC had a volume growth of 15%. Godfrey did much better with a 22.8% volume growth. VST saw volume compression of 3%. Even at the start of this financial year, where ITC's volumes were up 9%, Godfrey did in step with about 8%, and we saw a decline of 7% from VST Industries. And the previous quarter, which went by, where ITC actually had a volume decline of 1%, Godfrey Phillips saw a volume growth of about 10.6%. And it's not just the cigarette business. Godfrey Phillips, post its third quarter, also said that they're ramping their retail business up, and they're also setting up a base kitchen in Faridabad to prepare ready-to-eat meals, and also working on the confectionery business. As per Philip Cap, the triggers that or the reasons why Godfrey has been gaining market share is largely because, one, they've expanded the distribution of Marlboro Compact, which is a 10 rupee per stick cigarette, from just a few parts of the country to pan-India. And secondly, the recent launch that they've done of Stellar Shift Duos at 12 rupees per stick has also garnered favorable consumer response. With all of this, the outperformance of Godfrey Phillips and VST Industries versus ITC, where do the valuations stand? Well, ITC still at a premium at 21 times, but the premium as compared to the others has narrowed. Godfrey Phillips is at 19 times and VST Industries at 16 times 2-year forward earnings.
All right, Mangalam, thanks very much for that. That's the news coming in on Godfrey, and a nice explainer on what's going on in that particular space. There was a news flash, unfortunate incident. Air Force plane is met with an accident in Jaisalmer. That was the news which was flashing. We don't have much further details, but this is coming in from ANI. An Indian Air Force aircraft is met with an accident in Jaisalmer. That's all that we have. So awaiting more details as and when we get it. Sudeep, good afternoon. Just wanted your thoughts on two names actually, both capital market plays. One is BSE, stocks down about 6%. We got information earlier today that and the other one is Angel Broking. Angel Broking, from its high of about 2,500. It's one of the top losers in this small cap correction that we've seen, broader market correction that we've seen.
Prashant, as far as Angel is concerned, I always preferred Motilal Oswal or capital market stocks. Motilal Oswal had a lot of vertical. One single line of business, which is the equity broking predominantly. They are trying to raise money to get into multiple segments at this stage, but the fact remains that and the valuation was looking definitely rich at about froth, the Amphi coming in, the froth in the small and micro cap shares, as well as and some amount of profit booking is definitely happening. Correction in Angel One, I would wait and watch that. I have to do multiple more things to really command the kind of valuation. As far as BSE is concerned, I continue to remain positive. The charges probably is an excuse for the market to do some profit booking. But fundamentally, it's a good place to be in. And for a long-term investor, I don't see any remaining invested in BSE or even entering BSE at current levels.
Flash that was up for our viewers on the screen, where Ambuja Cements is saying that they could be norms, and Sanghi Industries, that's popped up close to 9%. It makes such a big difference because just now they finished their open offer, but in Sanghi Industries, what's your view on mid-cap cement or Sanghi Industries in particular? The stock, and now it's around the 105 odd mark.
Well, I think this disinvestment is mandatory because shareholding limit. So public shareholding limit has to be adhered. Just an arrangement and just a structure. They have on cement for some time, and I maintain my view. As far as mid-cap cement is concerned, predominantly because of the fact that cement performance depends on the region where certain segments or certain parts of the country where there is better pricing power, and I think the mid cap in that those geographies will continue to do well. That's my belief. So as quite a bit, and I think that's one company one should look at. The geography in which these two companies operate are have that pricing advantage as and when things.
Okay, got that. So what we are seeing across the rest of the FMCG pack, I mean, Mangalam, of course, mentioned what is happening. But we're seeing a lot of pressure on other names as well, whether it is Nestle along with IT. An underperforming part of the market, given the volatility and right now, would you look at adding anything to the portfolio from the FMCG space?
So I've been positive on FMCG for some time, and I've been for some months now. But I believe that the rural demand pickup, it hasn't yet happened. The government definitely is trying, and a lot of schemes are now going to rural India. With monsoon likely to be good, I believe that rural demand will be back. And if the rural demand exposure and sales coming from rural India, HUL is obviously the second company which I will like to mention is Dabur. I think consumption starts picking up. So undoubtedly FMCG company is kind of being avoided by most players. So this is the time to stocks.
Okay, all right. So the 331 is where we have what we have, and I mean, of course, broader markets will be with us on the other side. We'll touch upon many more stocks as well.
Welcome back. Aditya Birla Capital is surging after the board approved a merger of its wholly owned subsidiary Aditya Birla Finance with itself. Ritu joins in with the details and what brokerages have to say on this development. Ritu.
That's right. The board of Aditya Birla Capital has approved the amalgamation of the wholly owned subsidiary it has, which is Aditya Birla Finance, with itself, and that will create one unified NBFC that will then, more importantly, be in compliance with RBI scale-based regulations, which required that Aditya Birla Finance get publicly listed no later than September next year. So this is actually coming in a good 18 months ahead of that deadline. Of course, this is going to be subject to various approvals from NCLT, RBI, SEBI, etc. Now, after this merger, the listed entity, which is Aditya Birla Capital, is going to get converted from being a holding company to an operating NBFC. Vishakha Mole will then assume the role of MD and CEO of this merged entity. Now, the company says that this move is going to help it achieve a more simplified structure, a more optimal and efficient utilization of capital, and consolidation of the business, which it says will result in longer-term growth. As far as brokerages are concerned, Morgan Stanley has maintained an equal weight call with the target price of 196 per share. It says tangible economic benefits are not very material from this, but it will lower the holding company discount. Jefferies is more bullish. It has raised the target price to 225 a share with a buy call. It says the move will simplify the structure and lift the capital adequacy ratio by about 150 basis points. Of course, the stake in Aditya Birla Sun Life Insurance, which is currently at 51%, will have to be pared down to comply with the 50% cap on holding. But key to note, apart from all of this, is that Aditya Birla, yes, it's going to be compliant with the upper layer NBFC listing rules because of this move, but the focus will now shift on Tata Sons, which also falls in the same category and is said to be weighing its options to comply with RBI directions without necessarily getting listed. Of course, the final word is going to be with RBI.
Okay, all right, got that. Ritu, thank you very much for the details there. Yes, indeed, Aditya Birla Capital has been in focus all day because of those developments. Let's also talk about Cipla now. Cipla is actually the biggest loser on the index today. It's been trading under pressure, falling about 2%. And the concern is on supply disruptions, perhaps impacting the company's FY25 estimates. Ekta is here with more details. Ekta, what are you picking up?
Well, yes, it is a Phillip Capital report which has indicated, as per Exim data that they have, that Cipla's export of albuterol, which is one of the inhaler drugs that they've been selling in the US markets from the Indore facility, seems to have stopped. Now, this is since it received a US FDA warning letter in November 2023 for the plant. Remember that albuterol is around a $140 million opportunity for Cipla for FY25. Now, according to Phillip Capital, if in case the supply disruption continues, it could have a negative impact to the tune of the following for FY25, 4% on revenue, 10% on EBITDA, 12% on profit. They expect earnings risk to Q4 as Q3 seasonality benefits will taper off as well. They don't expect any major near-term earnings trigger. This is as the launch date of key products such as Advair generic and Brexon generic have gotten delayed, and the earnings concentration risk of Revlimid as well as albuterol, along with a delay in key drugs, keeps them pessimistic. Remember, they have a sell call. They've reiterated their sell with a target price of 1150.
Okay. Ekta, thanks very much for that. Sanjay Parekh is now with us. He's founder and chief investment officer at Soham Asset Managers. Sanjay, good afternoon. Great to have you with us here as always. And, interesting time to be speaking with you because, as of today, as of now, the small cap index is down about 10% from the highs, from the recent highs. So, talking to you, someone who's a stock picker, I just wanted to ask whether, anything has caught your eye, which you wanted to buy and which is kind of corrected. Many have come off 15, 20, 25%. So, it's an open-ended question. So, do answer that. And I wanted your specific thoughts on Angel One. That caught my eye. That's lost about 25% of its value from the highs. I'm not sure if there is some other fear because, you're hearing warnings from the regulator in terms of the fraud, etc. Could it be possible that on things like, the margin trading facility, which brokers offer, which has been highly profitable, the book has grown quite a bit. Could there be some restrictions? I mean, I'm just sort of thinking out loud here. Just your thoughts on that one. But first start with what you noticed. Go on.
Yeah, Prashant, good afternoon. So basically, ours is a large cap fund dominated by large cap. And we have mid and small cap, but we buy them if we feel the divergence is high. As of now, we are 84% into large cap. We moved from 77% to 84%. And that is because we were seeing froth in mid and small caps. So we really did not find a lot of value in the last 2-3 months. And of course, we use a bottom-up approach. If it falls within our filter, we would look positively. But we believe still, it's still there's a lot of froth. If you take the Bloomberg consensus estimates for mid-cap, it's 26 times 1 year forward. Small cap index is not representative because the stocks you don't like are really cheap, but the rest of them are at 25 to 30 times, somewhere 35, 40 times. And we all know the flows, the flows doing its wonders on valuations, be it AIF, PMS or mutual funds. So I think there is still a lot of froth. One has to be very selective. This could be, it doesn't end. In small and mid caps, reactions don't end so soon. So I think one has to be careful. And one has to be really on a stock basis. If there is, of course, something that you like, you have to buy them. But I think we are still far off from those levels where we would want to buy in mid and small caps. On Angel, of course, we used to own it, and now we have sold it because we didn't find it very cheap at 35, 3600. I think it's a great franchise now, reacted quite well at around 20,000 crore market cap. It's going to raise 2,000 crore. Mainly, they've stated that is because they would have to, the whole margin funding route, wherein earlier, clients' money could have been used is now not possible, and hence they would need some working capital. And that's where they've not stated any potential acquisitions that they want to do. But that is what the stated, policy from their side. So now, of course, market view is very important because very large part of their profits pool is from derivatives. So, and then, of course, if there is any regulatory change there, we'll have to watch closely because there has been earlier indications by SEBI saying that, almost 95, 97% people don't make money and, all that stuff. So we have to be watchful, but I don't think, there could be any major clampdown there. It's a great franchise with profits which could be around 1150 crores this year, 1,300 crores next year, and then it could even further increase, 13 to 1,400 crores. Of course, it depends on markets. So it's pretty reasonable now, and we certainly will watch it again to look to add. But having said that, broadly, we don't see any regulatory change coming into Angel from a SEBI perspective on the derivatives, which is a large profit pool for them.
Okay, all right. Hi, Sanjay. Good afternoon, Nigel on this side. I recall our last conversation. You said it makes sense to go overweight on HDFC Bank. Till then, till a month or so ago, you all were actually underweight on HDFC Bank. You all had higher exposure to other banks, SBI Bank, a couple of other banking names as well. Have you all gone full throttle on HDFC Bank now in the last 1 month or so? And do you still maintain that? And since earlier you all were overweight on SBI in comparison to HDFC Bank, at current reckoning, what is the choice?
Yeah, so SBI still is a very large overweight. We are around 7%. Till last December, for almost 9 months, it did not, give us results. But you saw we're just seeing the first year to date, index was up 3% and SBI has done some 20%. So that's what it is. It's always non-linear. It was very, very attractive. It still is attractive. And we would want to hold on to our exposure in SBI. Because today also at current levels, I think it's 1.1 time FY26 and 1.35 times 25, which is very reasonable for ROEs of 18 to 20% and ROA of 1%. HDFC Bank, we marginally increased our weight, and in our PMS, we have further increased. We genuinely believe, that a lot of negatives which are in the near term are, they're all in the price. We will see some more some more consolidation in terms of, because the whole merger was pretty large. So the whole liability side, slowly, the growth has to be there, and asset side growth will be reduced and NIMs would go up. But they have a very strong cost lever, and I very confidently feel that, if the earnings growth expectations are reasonable, they will be met. So I think it's very, very attractive on valuation. It could take 1 quarter or so, but from a price perspective, I think it is very little risk in HDFC Bank.
Okay, that is HDFC Bank. Overall, what's the sense, considering that we're in this phase where everyone's, first of all, second guessing when the next round of rate cuts happen. Then we're running into an election season as well. And then you have all the regulatory scrutiny. So what is the strategy? I mean, just the near term, given the elevated levels the market is at, how are you looking at things?
Yeah, so, earlier also we had said that this year we're going to have mediocre returns and that'll be back-ended. We are certainly, even on Nifty, we are not cheap, So, and as I said, the froth in mid and small cap is higher. But in Nifty also, if you take earnings of 1100 on and we give, India, I don't think we should go beyond 20 times for our interest rates. So, then you go to 22,000, that's where we are. And we have a whole 6 to 9 months ahead for 25. And then we look at 25, 26, and maybe, there broadly, we don't have visibility, but 1250 is a possible scenario, which is nominal GDP plus growth rate. So, we are moving faster, which is 3 to 6 months ahead and maybe 3 to 5% on price. And both can happen. And we have events now, politics is one where we know there's going to be continuity, but then we would have monsoons, geopolitical risk, even certain issues around water, we can't ignore. It's still small, but we need to watch how the administration is handling it. It's not in one area if it gets broad-based. So we have to watch all this. And that's why we believe that valuations are not cheap and we would have back-ended returns this year and that would be mediocre. That's our view, even in large cap. So mid and small cap for sure, we think that they can react further.
So since there is still a lot of froth in the mid and the small cap, would you look to up your large cap exposure? You've already increased it from 77% to 84%. Are you looking to raise it further by paring down your holding in mid and small caps? And as you did that in the last couple of months, what were the stocks or the sectors where you sold off some of your positions?
Yeah, so Rima, large cap will not fall, right? And you always have a bias. But what we've done is, when we got money, incrementally, we almost 100% was into going into large. If you have even cash levels which we keep in the range of 0 to 10, I don't think it's going to hurt you. So, but we look our comfort zone, and we broadly, as I told you, Angel Broking was one, earlier Jupiter Wagon, before that Sirma, and even we have trimmed in some of the exposure we have right now. So stand on the markets that we have.
While we started with Angel, look at the other one, BSE, the exchange. Sharp recovery, almost a 4% recovery is what we are seeing on BSE. Sajay was pointing out that they do 1,400 crores. You're talking about getting at some 14 times earnings after the 25% fall. But there is that QIP or that fundraise 2,000 crores, as you said. Perhaps
it's not done well for us, and it's just that sometimes you at any price. And here, these are the stocks that keeps us grounded, because it's really one of the worst.
Will it? Because you must do. You thought, or it's just taking longer.
It is taking longer, and it would be taking a little more time. They have size, critical mass. We'll see for another 6 to 9 months. Where they get back to the profitability zone, better profitability zone, and then acquisitions they have done, organic, inorganic, all of it after rent. So it is reasonable. So that's where we want to hold on for a while, but it's certainly underperformed Trent or any other retail like Titan.
Well, before we slip into a short break, Prashant was talking about some recovery in few of them. Suzlon has recovered a goodish bit. The stock was down close to 4% when we started. So that's recovered. Zomato has now moved to the high point of the day. TV18 Motilal Oswal newsroom. Well, it's that time of the day when Nimesh joins us. Nimesh, tell us, what are you picking up? A lot of pain in the people are ready for that slow ride.
Yes.
And large caps are getting bulk of the share.
I spoke yesterday as well. Few reasons why. One, of course, the regulatory action which has taken place. Two, the SEBI chairperson herself in some pockets of mid cap and small cap. Plus, we have the year-end adjustments, and this in the last 4 days itself is down 4%, right? But again, it's part of the course for the fact that we've seen such a big rally in the broader market. But again, from a flow perspective, my sense is there is buy flowing. I spoke to some larger HNIs today just to get a dipstick survey, and the feedback this looks like more of technical in nature, and the overall feedback is maybe flows into domestic mutual funds seems to be quite strong, right? So. Looks like it's technical in nature that we are seeing this pain in
tapping the knuckles, maybe that advanced stack phenomena as well, and maybe in the next few days, hope and feedback, Ramesh. But what about individual stocks?
So in terms of individual names, the phone today, but I understand there are very strong buy flows. The FI buying seems to have emerged on. That's been consolidating around those 52-week high levels of late. But today there is a large block got changed hands, and I understand one of the large FI investor will be quite interesting there. The third name is SW Solar. That's been a relatively industries. Part of the course for the small caps to underperform. The stock is down 18%, but now at these levels, some bit of HNI interest seems to be back. And I understand there are strong buy flows from HNI, and some larger HNIs bought as well in this weakness in the last couple of days.
BTST called. Mitesh, what do you have for us?
So on the stock side, I think the index with all kind of choppiness has closed near those level. So nothing much has changed for me. So I maintain a slight marginally negative. I have a BTST and Lotus Labs with a stop at 410, and look for a target of. And on the PSU bank side, SBI is an STBT with a stop at 765 for targets of 745.
Okay, all right, got that. Mitesh, thanks very much for the trades. Well, with that, we'll take a quick break, come back on the other side and get some technical perspective on the market. We'll have Jay Bala of Cash the Kiosk joining in. Welcome back. Well, still tracking losses, barring some of the large banks and some of the large IT counters. That's been the story of the day. Extremely jagged graph over there. 200 points, that's been the range, and the market's gone all over the place in that range. We've got Jay Bala of Cash the Chaos with us now. Jay, let's talk about the move that we've seen on in these two pockets, and these are the two strong pillars of the market, IT and private banks. Do you see the traces or the evidence of any sustained long trade on either of these, two pillars?
Hi, Shruti. Thanks for having me on the show. IT has come to an important support of 36,200, which I had pointed out a few times. It touched that intraday level, and then it's bounced back. But to me, the IT sector's movement is suspect, and I don't see sustainability there. If we see a break below 36,200 on a closing basis, then that will mark the start of weakness. But the trend change for the Nifty IT index comes below 34,200. When it comes to the private banks, it's actually slightly the reverse. The private banking sector bounced back to the 61.8 Fibonacci retracement of its decline from the all-time highs, and it's coming back lower. If the private banking sector were to drop below, say, I think 22,850, my memory recalls right, and that will mark the beginning of the next leg of the down move for the private sector. So watch out for this. ICICI Bank is particularly looking vulnerable there.
What about PSU banks, Jay? Good afternoon. You got a 2.5% cut there as well.
Yeah, that's right. See, there are key pivotals that are trying to turn, and SBI is the bulwark over there. And if SBI were to close below 737, that will mark the end of the up move and start of a short-term correction. And Bank of Baroda within that space, even that's starting to look slightly shaky over there, although it's near all-time highs, but it's starting to look exhaustive there. And even other PSU names, most of the private sector enterprises stocks, they've all gone parabolic. So if it were to break the March-February low, I think that will also mark the start of a reversal in the medium term.
All right. Hi, Jay. Good afternoon. Good to see you in. But what about Reliance Industries? If you have to look for one solid batsman in a team, it has to be Reliance Industries, which has been in 5 form. What are the levels you're looking at on that one?
Yeah, Reliance is absolutely the crucial for the overall market. And as I've been saying for several weeks now, index managers have been using this as a prop for keeping the markets up. The critical level for Reliance comes in the zone of 2,900 to 2,840. If this zone were to get taken out, I think that will mark the end of the distribution. And we've seen the small caps break down below the 15,200 level that I mentioned last week, and the micro caps are for the first time after November are coming below the 50-day moving average, and they've closed below it for the last 4 sessions. So the broader markets is clearly signaling that it was a distribution, but wait for the large caps led by Reliance to close below 2840, then that will say that the larger correction is starting.
Any particular thoughts on ITC? We've seen the stock correct from levels of nearly 500 down to 400. Technically, what is the chart telling you?
Yeah, ITC, bullish in the medium to long term, but there is a short-term, price structure that's pending. If it were to break 400, I think this has potential drop to about 370 to 365. And as an extension, that is likely to cause an effect on the FMCG index. Actually, below 53,100 on the FMCG index, the FMCG index is likely to drop to about 50K. So that is already a setup that is visible for several weeks. It's just probably waiting for ITC to drop below 400, 395 mark.
Okay, that's a call coming in on ITC. Pharma has been relatively resilient, but I mean today even some of the larger pharma stocks are under pressure. Do you see any trades here on the pharma or the healthcare side?
Yeah, it's a bit late here, and I've been bullish on most of the pharma names since October, and I've been pointing to this as my favorite sector, and it's come to even exceeded much of my targets. It's still, on an uptrend, but it's slowing down. If you want to look at something fresh, you might want to look at something like Dr. Reddy's or Arabindo. But these are all quite late trades. You might, if you are in the habit of pyramiding into your trades, then these might be ones. But otherwise, most of them are an avoid here.
Okay, most of them are an avoid. Any other specific trades you'd want to recommend, Ajay?
Yeah, I like Linde India. It's had a bullish breakout, and it's had it's come out of a falling wedge pattern, and it's likely to scale somewhere close to 6,800, maybe even 7,000. Watch out for this. This is seeming to be a good breakout. A conservative stop of about 5,800, but an aggressive stop of about 6,000. And Apollo Tires, that it's looking like a good shot, provided it breaks 500. Subject to breaking 500. If you look at the Tocom rubber prices, the last couple of months, they've risen sharply to by 50%, and it doesn't look like an end of a move. It could even rise another 25% from current levels. So, that could bring negatives for most of the tire names. So this is looking at good trigger below 500. Stop loss is 543.
Okay, all right. Jay, we'll leave it on that note for today. Thank you very much for joining in. Let's go back and look at the screen. It's looking very similar to what we had going on yesterday. The pain in the broader market, that has not ended today. In fact, if anything, it's we've added to the cuts. Nifty is ending absolutely flat. The gyration is about 200 points in that index. The bank Nifty saw a swing of over 900 points, 950 points. It was really all over the place. The last men and women standing, so to speak, HDFC Bank on the upside, TCS, LTI, Mindtree, Infosys and Reliance. But you take out these 3-4 stocks, and I guess even on the large caps, the picture would have been very, very different.
Absolutely. We would have been down, and down by maybe not a very meaningful number, but yes, definitely 40, 50 points. Easy. So few kind of holdouts in an otherwise down and drifting kind of day, and that kind of a market as well. 5:1 is the advanced decline ratio. It's actually easier to count what was up. So let me actually do that. So you got, of course, Geo Financial, which was up 2%. Oracle Financial Services has had a fantastic 24 so far. Another 2%. Linde India, Jay was talking about that, 7% gain on Linde India. AB Capital started 5% higher, will end about 2% in the green. Torrent Power will end about 3.5% higher. There was HEG, 7% sharp move, almost 1,800. There was India Mart, which was up about 3% or so as well. Poonawalla FinCorp, Balakrishna Industries are some of the other. MGL, of course, which had a rough last week. MGL ends about 2% higher as well. This is the largest volume-led gainers list that we had today. Prima.
Well, in terms of the sectoral tilt, IT held up. The Nifty IT index ending with a gain of about 0.6%. And here the large cap movers were TCS and LTI Mindtree. Both of them were up close to about 1.7%. On the losing side, Realty took a big knock today. The Nifty Realty Index cracking close to about 3.5%. Metals too under pressure. The Nifty Metal Index down 1.8%. All in all, the Nifty and the Sensex end absolutely flat. Just down 2 points on the Nifty by the close. But the mid-cap, small-cap selling pressure continues unabated and a very bleak advanced decline ratio. We had one stock gaining for 6 stocks declining today. We're going to take a leave on closing bell. Thank you very much for watching, but do stay tuned. Markets Forward comes up next.